an offer included. But I'm wondering, when you think about that kind of embedding and that kind of potentially seamless, but also less transparency, as regulators, what do you think about, is the technology, you think, going towards making your job easier necessarily? I know we've talked a little bit in the earlier panel about reg tech. Do you see, you just mentioned the role of government is to kind of facilitate this technological transition, but what are the things that keep you up at night as you think about, these very complex technological problems in terms of things like a micro-pension?
Yeah, probably Shemu will talk more about regulatory, maybe the regulatory side, but I think for me I would just touch on the policy side, which I think somehow work together. Now, I mentioned earlier, probably let me start from there, the issue of the role of the stakeholders, the wider stakeholders. And I'm picking this from, should we consider this to be voluntary or mandatory? I think the discussion has put to bed, it is voluntary. And then so the question is, how do you get these voluntary new concepts to these people with very irregular and small incomes? I think for me, the critical issue here is getting everyone on board. I'll pick on an example of a similar scheme that we've been running in the country, in Rwanda for some years, the Universal Health Insurance. I can tell you it is very challenging, but at least today we celebrate 80% participation for health insurance. When you think about insurance, where sometimes you pay the premiums and you never get the benefit, probably pension will be easier because whatever you pay, especially if it is a DC, whatever you contribute and whatever is earned is your money. So I think it could be easier than insurance. But I think, is it easier to sell out and get everyone on board? No. But is it possible? Yes. If you get the whole sector and the intention and everyone working toward that. So I think for me, to be seated here and discussing it is a starting point. If you get the policymakers, when I think about the program we have rolling out, for example, pick example of Rwanda, it's going to be launched by the Prime Minister. And every minister and every mayor and every local leader and everyone in the world of NGOs are going to be part of this journey. Is that practical in every country? I'm not sure. But is it something that can change everything? Yes. So I think for me, we are talking about generational stuff here. It's not something that we are going to fix tomorrow and then you're done. It's got to be go on as part of our lives moving forward. So, but I think when you think about not doing anything now, then probably you better start thinking about it. Now, technology, I think for us, I'm very, I'm the least educated about technology, but I will speak from what I know. I think the way we are looking at it from our case is just to widen the menu. So the people are talking about today, they are using the technology for other things. So I can pay for my taxes, I can declare my taxes, I can pay for my school fees, I can pay for my bills, I can pay for everything. Why can't I pay for my monthly or pension contribution? So probably we are complicating it. If you look at our colleagues in Kenya, they are doing everything on their phone. And these are the people we're talking about. So if they are able to pay for taxis, for a beer, for everything on the phone, we're just asking ourselves, why can't we add on the pension? So I think if we try not to complicate it, and then us here who are very knowledgeable, deal with the cyber issues and protection of data, that one they don't want to know. But I think if we get everyone to preach about the same subject, and then those who are equipped enough deal with the real issues at the background, I think, I don't think it's a very complicated thing. Regulation, for shame we add on, but I think for us, what we're trying to do, if you design the value proposition very well, and it is delivered through, anyway, regulated institutions and structures, then I'm not concerned much about the regulation issues. So if you are delivering it through, like for example, our case in Rwanda, we want to deliver through, in terms of distribution, telecom agents, some banks, some MFIs that are strong. I'm not worried about regulating pension, micro-pension. I'm asking the regulator, are you sure that institution is properly regulated? How about the data? How about, so that's how we are looking at it. So I don't think much about it. I think about already existing institutions that are regulated already in the ecosystem that you want to use as a delivery channels. Thank you.
Great. Shem, so I guess with the M-Pesa network that you have, 75% of the people you were mentioning on M-Pesa, right, or financially included, are you ready to, what kind of opportunity do you see for really increasing the micro pensions, for example?
Thank you, Margaret. I think just speaking from where Eric has left, I think for us, technology has been a very big enabler because for a long period, in developing countries, we saw a huge gap, for example, in financial inclusion. That has been substantially reduced now, and financial inclusion has gone up. And what has technology been able to do? Technology has been able to deal with the barriers that existed, that even regulators had no solutions for. They came in and provided solutions for those. For example, it doesn't really matter today, for example, in Kenya where you stay, as long as you have a mobile phone network coverage, you are able to get financial services at your doorstep, at your place of work, where you reside 24/7. And that's a major achievement. And I think the thing that technology has brought to bear has introduced a lot of simplicity in the way we provide financial services and cut down costs, solve geographical barriers, et cetera, et cetera. So we really see this as an enabler. And we can really leverage on those kind of simplifications that technology has brought forth to be able to as well grow our pension coverage through micro insurance. I mean, what other service providers in the insurance space have not been able to do is to be able to provide this kind of service to this particular stakeholder group. Let me refer to them as informal sector workers, in quotes, because of costs of doing that. And what technology can really enable us achieve is to reduce the costs and be able to be very effective and efficient in terms of providing that service. And we have seen this happen. I mean, long time ago, it was thought, for example, that the poor would not be able to save, but that has been disapproved by literature, and they're able to save. So I think technology, not to complicate it, it brings in simplicity, and that's what we need to deal with. But going forward, I think it has not come without challenges. I think as regulators then, we need to focus more on the challenges and how do we fix it and make technology work better. Rather than going ahead of technology and trying to fix issues that we think are emerging, let's see the issues emerging and then deal with them. I think the simplicity it brought, the cutting down of cost, the convenience it gives to the users of those technologies is really what for us serves.
Thank you. Looking at the time, and I want to make sure we have time for questions from the audience. So maybe what we'll do is take some questions from the audience, go back to Dubel and others. So is anyone from the audience have a question that you'd like to raise? No, I don't. Yes, oh, go ahead.
Thanks. Well, it's mainly a small observation on and not so much a question, but one of the things that I think we are hearing is that some of the pieces for, which is whether it is technology or financial inclusion ecosystem and indeed demand, seem to already exist. What I heard Dobel mention was, I think, this sense that, if we think about people participating at the lower end of the income distribution, participating in a pension program, I think a big challenge will continue to be financial capacity. So do they actually have the ability to save adequately for a meaningful retirement? Things like access or things like interest can be kindled and access can be provided, but if people don't have money, they don't have money. But I think one of the key things there, and I think if I may take a leaf out of Eric's book on that, is by bundling insurance, I think you're tending to then improve financial capability because the poor and the rich face similar risks, identical risks. I think the key difference is how do they really mitigate or manage those risks. The poor, we find, are typically paying a lot of the, paying for a lot of the insurable risks from past savings. So if my crop fails, I use up past savings to cover up a gap in income. If my cow dies, I use up past savings to buy a new cow. Now, I could have easily paid 3% or 4% of the cost of the cow and actually, gotten insurance. And by doing so, it could have freed resources which can then be, deployed for better consumption, maybe sending my children to better school, and then perhaps also saving for old age. So I think there is merit in thinking about a more integrated approach. And I think what Rwanda is doing in that case, where the government recognizes that people are not necessarily going to step forward and willingly buy insurance, and saying, okay, can I use some fiscal resource to add on insurance to make pensions more affordable and simultaneously perhaps to get people to get used to the concept of insurance, I think is great.
Thank you.
Sorry, just to, this one thing I hear from Alibaba's senior management is that people don't wake up to buy insurance because typically insurance are sold. I think that's a very common understanding. I think what they say that if you develop a life cycle use case and you're sitting on this platform, either you are savings or you're buying insurance or you're putting pension embedded into that, customers should not be thinking about things. The whole package should come as a total integrated solution within the platform. So you don't have to buy and think as you move through your life cycle. I mean, as not in the product sense, in our own daily life. I think that's what Alibaba has done remarkably well. Ping An has done remarkably well. I think if you get a leaf out of it, I think this will be a huge learning for all of us. From a technology, platform, life cycle integration.
So I think this is a really key point. So I'm wondering, how do you have good actors, though, sometimes in financial markets, and bad actors. And when you put all of this into a very simple, maybe, way for the consumer to engage with the financial services, because you do have all of this information on their age,
Sure.
So if you have them really at the fore of your, what you're trying to do, you can, optimize. But
Sure.
what if your goal is to
Yeah.
make the most
No,
money you possibly can? So how do you deal with
So
this
I
in
think,
your model?
I think today the data is shared by, irrespective of the product you're trying to sell. The same set of data. And it is structured, unstructured, everything. I think there are two issues. Of course, there's a commercial intent of, I think, behind all this platform. I mean, you cannot make it not economically viable, this platform. It has to make some money, okay? They're not doing some charity not there. But it should be in a way, it should compensate for great experience. It should be timely, instant gratification. Customers are willing to pay for that need. When the need, you are there. There's economic value for that services. But there are people who are going to exclude. I talked about the digital exclusion. That's a real problem. If they find that you're digitally, they figure out that you are not capable of doing, they will start blocking you. That's a worry we should always, as a policymaker, think downstream. So those are the bad actors who I'm worried about. I'm less worried about the bad actors who will misuse this data, because customers are going to move from A platform to B platform. You can't fool people every day.
Okay. And and others may have views on this. One of the things that was, I think, brought up also yesterday in the FinTech discussion was the concentration. So when you put, I think on your slide today, in the first session, you had big data, AI,
Yes,
and quantum computing. So these forces, though, get us to these very concentrated, private sector actors, but also very concentrated sources of data, which then creates that cybersecurity risk.
Yeah,
So I'm just, how do you pull all this into something that's going to be, I guess, sustainable?
He mentioned that, I think, end of the day, if you create a customer data consent architecture, very difficult to achieve.
Like blockchain, with
Yeah,
blockchain
where
or
I
something.
own, but there's immutable structure, there's a way you can't manipulate, there is a way out, but it's too early. I think there's a cybersecurity can cause devastating impact. If somebody cracks into this whole concentrated data system, it can cause unimaginable problem for the whole society. That is a real risk there. But the good part, I think, Chamberlain talked about that the whole economy is moving to small, modular, distributed system. So it may have increased the space of attack, but it may not have create from a experience perspective, it may not create that whole catastrophic single large-scale destruction in terms of data being manipulated and cyber attack. So there are two sides to the issue. Point taken, cybersecurity is the single biggest future financial crisis, because if there is going to be a next financial crisis, it will be a cybersecurity issue.
Yeah, so the point on disaggregation, I think, comes back to the fact that the financial services of any kind needs to be able to access consumers. And in the old economy, we used brokers and agents, or we used employers. In the slightly newer economy, we started using other aggregators like farming groups, churches, informal societies, and technology offers us interesting new platforms to do that. Those platforms are quite opaque and difficult to access for the regulators. They sit outside of the typical regulatory space, and we're catching up with that. And that's where the whole, Google and Facebook and Apple discussions are about. How do we deal with these aggregators? In the emerging markets that we are talking about, there aren't that many of these digital aggregators yet. And that, I think, will be one of the key changes when we move from depending purely on mobile to what you can call the over-the-top services. But it depends on this expected phenomena of smartphones being pervasive, which is not yet, perhaps in sub-Saharan Africa. I think that will be a key tipping point for creating more of these platforms. And it will also be a key a tipping point for what you earlier considered as financial literacy of capability. But I think if we look at the behavioral economics learning, there should be a whole different way of how we equip consumers to make decisions that is not about teaching them about everything, but using technology in interactive ways that is less reliant on large reams of education, but actually can get people piecemeal to adapt and learn about the product. And you see some of those experiments with peer-to-peer insurance, where a smartphone interface allows somebody to learn about the product as they evolve it. But those just we don't yet see them being pervasive, and I think we're still a bit far off from seeing those products available in the market.
I think as a regulator, we should not worry much because on that aspect, because if we get I always say we should, as a regulator, we regulate activity, not technology. The issue, I think, is around technology risk management. That's where the issue is. How do we manage the risk which comes with the new technology? Because an activity looks like a duck, we will treat them like a duck and regulate them like a duck. So that's anyway as regulators will do. I think to your point around large monopolistic enterprise which is getting created in certain market, will that create a policy challenge for all of us as a regulator? Answer is probably yes. I think a lot of large country regulators are thinking backward now. A recent one large country has put all the transaction of peer-to-peer payments into a national infrastructure, almost like afterthought. So they are catching up. But if you are a regulator where this has not happened, don't allow that to happen. Start thinking carefully what you're building.
I think there's one other angle. I mean, I think it's clear that technology has a lot of potential, and the points I'm trying to make is both from the provider and from the consumer side. There are incentives that doesn't quite align with it being organically adopted or
Yes.
pervasive. And I think with this, perhaps with a policy angle on, particularly from the supply side, what we're saying is we don't see, when we scanned sort of multiple emerging markets, looked at sort of 160 of these applications, we don't see them being applied in the way that we want to the markets that we want to expand to deal with these challenges we think it can. And I think from a policy perspective, one of the interesting things that come up is that the technology providers are often the ones who have the initiative and can do some of this, but they don't have right of play from a financial regulatory perspective. And the financial players who have the license are often the ones who are not incentivized to solve these problems. So I think that will be one of the key levers that I think from a policy perspective we need to think about, is how we enable those with the means and the incentive to pursue some of these markets, because they would typically not be the people we are used to. They would be not typically regulated from a financial perspective, and they're quite intimidating for regulators.
Maybe Shem and Eric, but not to put you on the hot seat, but You know, how does this strike you in terms of kind of when you would be looking at solutions? And we haven't really talked about cross-border, but, you know, and including cross-border solutions, where there may be a technology provider that isn't based in your country or maybe even the region, but that has a solution. How do you, you know, what do you see as kind of the issues that you would be wanting to deal with or be concerned with addressing from this kind of perspective?
Okay, from the regulator's point of view, I think our main objective is to be able to minimize the risks that come. But we recognize that that minimization of risks may not be the regulators, may not have the tools to do that. And that mitigation might actually be possible from the fintech developer's point of view. And so how we go about this is, I think we need collaboration across the different providers of different services. I mean, the fintechs have provided a platform. The platform has come with risks. Can we collaborate and have those issues addressed, whether they are internal or cross-border? And that is happening a lot today in terms of, because the fintechs also have got, if it's in-country, they have their own regulators, and then we need to talk to the regulators of those particular fintech companies. So I think I see this as a collaborative effort to minimize the risks and pick the best that fintechs are able to offer and enable our customers or service providers maximize the provision of financial services to the consumers. But we recognize that the risks are there and we cannot close our eyes to them. We cannot address them alone. We need to collaborate.
If I can add a provocative statement, I think we must have to think about creating public utility for things like know your customer. Why should every fintech bank spend its same money doing the same, I don't want to use a bad word, know your customer? It can be a shared utility by the government, but which can be then stops the source of the problem. The real source of the problem is know your customer. If you think about from a regulatory risk perspective, if that becomes a public utility, then it becomes far more simpler to deal with the downstream issues.
I mean, as I said, probably I'm the less informed on this subject, but I think I will just pick on what is the practice I've seen. Recognizing the gaps in some of the capacity gaps in terms of the probably in our some of the regulatory bodies. I think and these fintech solution providers are quite many, and they are coming every day, which is a very good thing because they come with solutions. But I think what we have done in Rwanda, and I don't know whether it's the best practice, is pick it from data. For example, we have two public entities that are in charge of that. So, for example, the national data is a public good, but it has to be accessed through a certain framework to ensure that it is secure and not abused. So what the fintech company, either you access that data through your regulator. So if you are a telecom company, I'm going to use some terms that I'm not sure they are correct. So if you are providing your solution through or leveraging on mobile payment service providers, then you have a regulator. You access the national data through the regulator. So the regulator knows how to deal with you, and they understand the language and all your jargons. So you don't go direct to the house of the data. You go through your regulator. That way, I think you try to harmonize ways of using it and minimizing the risk. The same thing with the banks and MFIs and SACCOs. You can access national data because they are integrating all the data, the national data or national ID data to the personal accounts and your cell phone number and everything. But you only access it through your regulator. So you apply through your regulator to access that data. Hopefully, that is a solution than going directly. But I'm not sure that's the best way of doing it. But I think for us, it has helped a lot because there's a bit of a chance of being able to get it and use it in the proper way. And if you don't, because it's anyway your regulator, has ways of dealing with you.
Thank you. Any final remarks, Ernesto, or?
Well, I think this is there's every country has a different capacity that has to be analyzed. No, I think the infrastructure is different from a pension standpoint. The underlying framework, whether like we talked about, does their national ID exist? Is it a way to make sure that the privacy is correctly kept? And for example, in some countries, like in India, they have biometric ways to verify identity for individuals. And as I think, as we discussed in some of the cases that are outlined specifically in this chapter in other countries, the biometric is still evolving into being adopted into providing access to different services. I think that I guess a big question is how much does a regulator do versus how much is it really developed from the private sector directly, and I think that's a really complicated question, because it really depends on the characteristics of every country and the capability building and the capacity of every country that exists in each one of them. So that's what's really different. No? That's what's that has to be significantly looked at when looking at that. I think there are countries where probably there is no infrastructure. No, there's very little infrastructure from a pension administration standpoint, and you have to build up from scratch into doing that. But there's also, I guess, where countries do have the infrastructure, the question maybe is, what are the barriers of entries into these fintech companies in order to provide services, and how much does the regulator tightly couple the financial services from fintech industries, from the fintech sector to the pension industry itself? So the coupling, or how much is it linked in between these two services, is something that needs to be again looked at on a country by country basis. Every country has a different regulatory environment, a different market that it will be able to facilitate entry, or maybe it needs to be at a different level or a different end of a spectrum, more concerned about regulating and ensuring that risk is not exceeded by the standards. But I think one really interesting question I think you raised, Margaret, is, for example, the question on fintechs are no longer local. No, the fintechs are now, we see it in the case of Uber and Airbnb, things are happening at a global level. So I think regulation, or I guess we need to look at things, how these things can benefit your constituency or your individual country, in order to be able to take advantage of some of this technology. And sometimes there's there's various restrictions on every country that may allow the easy entry or not, or barriers for these fintech industries or fintech companies to be able to provide these services. So I think that's something that's still evolving, and that's something that will probably come down the line in the future.
Final word is that we go back to the principle of the future economy. Build public utilities which is shared, things like KYC, national ID, data consent architecture. The core pension industry has to relook at their whole system. They got to completely junk it out and build an open architected system. Then end with a more integrated platform. Customers don't bother whether it's pension or insurance. They are going to be so busy in the life cycle with this activity-based economy. We should find a way to provide financial services when they need it. At the time of their need, we should be there in the system, in the platform, without necessarily calling ourselves pension fund or an insurance structure or a savings product.
And that's a great word to end on. I appreciate all of your contributions. Thank you so much to the panel, and thank you for your attentive participation. Thank you. you. We should bring your.
Thank you very much. Thank you for the panel, and we'll just take a coffee break, please. Reconvene at 11:30.